Hi, Michael Weissman. Hello, Warriors. How's everyone doing? Partial day today. So don't make too much out of what's happening here today without volume. Hi, Ryan. How are you? Can you guys see my screen?
All good, mate. You?
Pretty good. So dollar coming in a little stronger, not much. Still think you got to buy this stuff, and unless we start closing under 108, I know Kman wants to be a seller up here above 110. That's what he said last week.
Oh, we didn't get there.
Yeah, it didn't get there, and looks like we're going to push the highs in U.S. dollar yen. So your impressions, even though it's a semi-holiday here in the U.S.
Yeah.
I mean, we're in that new quarter, new month.
Still,
Are flows telling you anything yet?
Sorry?
Are flows telling you anything yet?
No, not really. As you say, new quarter, new month. Still hesitant around 145.
Good number, Ryan. It worked for a nice scalp.
Yeah, and low 144s are bid as well. There's a bit of a trend line coming in there, so we are a bit stuck. But if you look at yields, for instance, the US yields are pushing higher and the Japanese yields are hanging around, the JGB is hanging around 0.4%, which is a bit below their max tolerance on the YCC. But yeah, it's a bit of a
quandary,
touch and go there. Well, we will see. We have ISM out a little bit later. If yields push through or not. But I was saying this morning on the Flow Show, it looks as if the bond market and the yields market is now come around what Powell was saying, and now it's going to be down to the data really. We had the end of the month, end of quarter with a bit of dollar sales, and now we are back to a fresh market. So yeah, I'm a little long dollars, but it's very shy. I traded the fixing on Friday in euro, but I already managed a fair bit of it. I'm a little long dollar Swiss, and that's it.
Okay. So I want to go to Stel because this was a scenario, and this was also a scenario you talked about, came in that maybe it'll be a F.A.C.E. So, I mean, it looks like it's trying to break out here. I'm not sure what to do. It looks like it wants to break out. So I don't know if it's going to be a false breakout. It hasn't even broken out yet, so I guess it can't be a false breakout yet. So,
well, it's trying on the excuse me. Good morning, everybody.
Good morning.
It's trying on the back of basically Powell saying, I was going to say Bernanke again. Powell saying,
we're going
higher for longer. Although he didn't tell us anything new. He said that the majority of the Fed members are looking at 2 more hikes, which is what the dot plot says anyway. But the market, as we have said for a while, it was very quick in pricing cuts for this year, and now basically it's undone all of them, and we're pricing 1.5 hikes, and then the cuts come. So the question is with 10-year yields, we're getting to these levels. I've been talking about 390. Okay, that's descending trend line makes it a little bit below there, but we have
depends how thick your pencil is.
Exactly. But we have payrolls this week, and then we have CPI and the Fed. So all these things are going to cumulatively, collectively tell us if we're breaking out higher or not. As I've said before, I think that unless inflation starts surprising to the upside or starts ticking up, I don't see how 10-year yield can go a lot higher than here and stick there. So, we could try and test 390, 4%, but I find it very difficult. As a risk-reward trade, it's no longer for me the attractive one. It was attractive for months and months to be short. but now
Yeah.
we're getting to a level where it isn't. And if anything, it's attractive to be able to be taking in, 4% yield. So a lot of investors are looking at that. I've said this before. I've talked to quite a few people I know, and they're all saying the same thing. No, these yields are there. We don't know how much longer they're going to be there. And my opinion is that inflation is going to continue to go down. Okay, it's not going to go 2% and stay there, but it's going to get closer. So as long as that happens, I don't see how yields can go higher and stay higher. So let's see. Lots of data, lots of important data coming up in the next couple of weeks. So, and it's also summer markets, which tend to be illiquid, and moves tend to be irrational sometimes. So a lot of salt with everything.
Okay. All right, I'll come back to you, Ryan, and ask you, can you be any more wishy-washy than any of us have
Well,
been so
I'm not being
far?
wishy-washy.
Huh?
I know what I'm doing. I've got a buy stop running above 145 because I think
Okay.
if it breaks, it's going to go.
To what levels are you looking at above 145?
Well, go on. 182.
50? 180? Okay, one of those calls. All right.
No. I think if it does break 145, it's I could see it getting up to at least 147 pretty quickly.
I just noticed this 46 level was where you had this candle back here where it was trying to hold. So
it should get there obviously pretty quickly, but I think there's too many eyeballs on this 145. People expecting intervention. It would be a big surprise if they did intervene just on this level. So I think if we get a knock through it, it's going to knock a load of anyone front running, and if that's significant, as I say, could be a bit of a flyer higher.
yeah, I for a while believed it when we had this breakout over 138. It actually measures 148, 149 from this level. If you just arithmetically from, you call it 28, 38 breakout, never even tested it, it's 48. So
well, it's slowed down a lot. Yen weakness in general has slowed down a lot. A couple of weeks ago, you looked at the end of week report and it had gained 1%, 2%, 4%, and last week the gains were 0.5s, 0.3s, 0.4s, and even some strength against other currency like Kiwi yen actually gained. So it may have run out a bit of puff, but whether that was just month end or not, we don't know. But it's certainly not going at the rate it was a few weeks ago.
Okay, so when I look at the dollar, just before I drew this line, I was looking at this, and looks like a flag to me. Some type of bear flag after this, and it actually measures down under par if we break down. So I'd go with that against last week's high with some tolerance, a lower dollar down here, which tells me, I think that, we're probably getting close to a top. I was just looking at the dailies confirming, but look at this glaring divergence on the 4-hour. I mean, look at where we're at compared to when we were confirming the momentum here. So, we've had this grinding high, but, and in the last few weeks, I've had divergence, hold, and then get blown out. A lot of blown out divergences, like this one, right? I had divergence, and then either an exhaustion or breakaway gap. So, I don't know, when we bring in also Stel, strange action, and gold looked like a reversal week, but gold down 7, silver up, this gold silver ratio, which also kind of runs with the dollar, is implying lower here, favoring silver. So it looks like it's still that way.
I think the yields are driving this in the short term. The yields are driving that. So if we get the breakout, you can bet we're going to get a breakdown in gold. And I still think it's just slightly more than 50-50. I don't want to say 50-50, but slightly more probably that we do break below and head towards 1840, 1850.
A lot of people with that number in their
Yep.
head. Lot
So
of
maybe
people.
we don't get there, or we go straight
Yeah.
through there.
Yeah, that's right. No maybes about that.
Mhm.
You're right. Anyway, I mean, yeah, you cynical guy, you. Okay, so Blake is back. Great to
What's
have
up,
you back.
Coach?
Hey,
Hey,
buddy.
Hey, guys. Hey, team.
Saw your pictures. It looks like you guys were enjoying and had a nice trip, and great to have you
Yeah.
back. Yeah.
Yeah. Thanks. It's nice to be back. It's hot as can be here, as it probably is where you live too, Dale. It's
I can't take it
ridiculous.
anymore.
I know it's brutal, but you know, it's nice to be home, and thank you, George. Really appreciate the welcome back message. You know, we had a wonderful trip. It was we turned it into a family trip, and what was really great is you know, a lot of nice time with the family. We had to do an impromptu trip over to the beach because my son's team didn't qualify to advance to the finals, which, you know, I mean, we didn't expect it anyway, so it was fine. But we went to the beach. We saw one of our clients.
Yeah, I saw that picture too.
Yeah, his name's Ben, and Benedict, and he's been with me for like literally like 8-9 years. And so it was wonderful. He showed us around Charlotte, North Carolina, and took us out to dinner, and it was really a pleasant trip.
How do you compare those beaches, Blake, to Southern Cal beaches?
It's not night and day, Dale. It's white, you know, soft white sand, and it's the water's clear. There's sharks all over the place. It's awesome.
Wow, it's beautiful. Yeah, more beautiful. How about the water temp?
It's beautiful. Oh my gosh, it was 78, probably 80 degrees.
Oh wow.
It was
warm
awesome.
ocean water.
Oh, yeah, it was warm ocean water, and it wasn't just because Dale peed in it. It was
it's almost like the Caribbean.
It is, and it was really pleasant. But it was hot. It's a different type of heat too. So anyway, but yeah, everything was good. I you know, kept my eyes on the market, and I guess the one thing that I came back, and my first go-to chart is going to be you know, the first. Well, no, it's actually going to be the dollar index, and you know, this is the chart that I've had. And you can see I haven't really drawn on it, right? I've just been kind of waiting to draw on things. But you know, we rejected the 618 at the end of last week. There at the end of month and a quarter, and the dollar is just kind of mid range. I still think this is a bearish consolidation before we eventually break down. Yeah, but you know, at the same time, it's hard to be very directional. And I heard you say a little bit earlier about being wishy-washy, and Ryan you know, definitely fought back there and said he is not wishy-washy on the market, but I myself, you know, one of the things that I must say is I thought yields were going to break lower, and they didn't. And you know, and you take the 10-year bond market, and the 10-year bonds are breaking down. Yields are actually breaking up out to the upside, alongside with, you know, dollar yen and all the other yen pairs. So I thought we were going to see further consolidation, or maybe even a bounce in the bond market, but that has not been the case. Yeah. So anyway, so you know, taking a step back, I think this is going to be a really big week for the dollar. You know, obviously we have not only the you know, a lot of data this week, but we have the jobs report this week, and you know, I'm still a little skeptical if we're going to see, you know, the job market weaken yet, but I think we're getting damn close. If not this month, then it's coming up. There's a lot of I kind of got caught up on a lot of the you know, a lot of the podcasts that I've been you know, have dismissed this whole week being out of town. I got caught up a lot yesterday, you know, as I was traveling the last couple of days, and you know, some economists are feeling that this is, you know, we're getting really close to the turning point in the jobs market. How are you guys sensing that? Ryan,
Short Twitter, they can't even load my columns.
Oh, it's so ridiculous, the whole Twitter thing. And you know, I have to say,
It's over.
Well, no, it's just poor management at this point. But we're getting tweet limits, like how many tweets we can read. But if they're trying to, you know, correct the scraping and the scraping data, you know, I get it, but I don't know if this is the right approach. Anyway, it's been very frustrating, and it was frustrating for me when I was, you know, over the last couple of days too. I was kind of felt like a fish out of water there for a bit. But anyway, no, going back to the jobs market, we can start off with Ryan, because you've been awake longer than Dale and I, and probably Stelios too, and Kman. We'll go, and maybe Steve as well if he's here. But Ryan, let's start with you. How do you feel about the jobs picture in the U.S. and is the picture set to change right now?
We've been having this conversation for about a year and a half.
Yeah, right.
It's this might be the one, or we're getting closer, and we never seem to. So, you know, eventually it will happen. I have no idea when it's going to happen. You know, we thought jobless claims were maybe starting to indicate, saying they were creeping up to 260s, 265s, and then last week we get a 239. So, you know, it's 2 steps forward, 1 step back. I don't know. It will happen when it will happen. All we can do is react to it when it does happen. But we have enough big data this week to maybe get some little clues, you know, from the ISMs. We look at the employment numbers there. Thursday's a big day. We get Challenger Gray, jobless claims, ADP, and JOLTS. So that's,
and we'll get the ISM. We'll even get the ISM services.
And ISM services. So that's going to be a big enough day ahead of Friday's NFP, and it's also double bubble with the Canadian jobs data as well. So loony traders have got something extra special to look at.
Yeah, you know, it's not every month that we get both sets of ISM data. We're going to get one today, and I think, and by the way, I think after today's ISM data, you know, you're going to see volumes really trickle off as everybody prepares for, you know, the U.S. holiday. There's so many traders that aren't even here right now. This is typically a 4-day holiday for people in the U.S. I mean, I am not taking one, obviously, but and neither is Dale. But you know, a lot of people do. They end up you know, staying out, you know, throughout the entire weekend.
Well, they're so rich.
What's that?
They're so rich.
They are. You know, I actually, the ridiculous thing is I had to get back in time to get my son, who just left like literally 10 minutes ago at 5 o'clock in the morning, just left out of my house to get to San Diego to spend it with his friends for the 4th of July while I get to sit here and bake. Yeah. So he's
living the dream, man.
Living the dream. I'll tell you that.
No, you are living the dream.
Oh, I am living the dream. I'm living the dream right here in 111 degree weather. Yeah.
It's
anyway,
probably worth,
but I was going to say,
mentioning that there's no face show tomorrow.
There's going to be no face show tomorrow. Actually, there's going to be no. Well, are you guys doing the European? Are you going to do the flow show? No. Yeah,
I'll be at the beach. So if you guys want, I can have some background noise though.
I was going to say, I think all of our shows are going to be canceled tomorrow for this holiday. But
we'll the foreigners are even going to take a day off.
Oh, I'm telling you, this is it's a big holiday. Volumes
flow show foreigner people.
Do we have a?
But what I was saying is, you know, we don't get these reports. You know, you get both ISM pictures before the non-farm payroll. But you'll notice that, and I'll go back to this. You'll notice that the ISM services, you know, employment number came in under 50. It's expected to stay under 50, and that's, you know, being a services centric country, that's something that you think it's going to, that number, I think we're going to have to carefully watch on Thursday ahead of the jobs day. I think it might actually alter expectations. So speaking of which, since we've heard from Ryan, Kman, you have any thoughts here on the employment numbers?
Yeah, I'm same reaction as Ryan. You're going to ask us every month, but we are going to be watching whether that domino stands or falls. I really don't have much of expectations. If we would have had a complete string of those claims getting worse and worse, I would have said like, yeah, the domino is ready to fall. But then last week's number was better than expected, actually. Came back down to below 240 K. So I really don't know, my friend. We will have to wait for the data. We are data dependent, just as everybody, you know.
Yeah, right. That's very true. We're definitely data dependent. Stelios, do you have any views here or opinions?
Nothing different to what the other guy said, but one thing I do want to say is that I watched a video of Danielle DiMartino Booth the other day, a couple of days ago, and she said something which people forget. The payrolls number has had for the past months, I think it's a year or something like that, it has this well, it always has this adjustment, which is the birth death model, and there's an adjustment that's been made to the number, which is not a real, you know, people with new jobs or whatever it is, you know, as the number is calculated. It's an adjustment that gets made. And she said that from the recent numbers, 40% of the payrolls number, roughly, or just under, is from this model. So it's an adjustment. It's not an actual number, right? It's not an actual you know, people with jobs, etc. So we have to be aware of that. And also, you know, the way that the claims numbers are calculated, the way the employment numbers are calculated, they're not straightforward. You know, if you have 2 jobs or 3 jobs, they're counted as three people working, which is a bit misleading. So I just want to, I'm saying this because I think we should be careful with the numbers, but the way they're calculated is still not showing weakness. You know, it started to show
why
some
doesn't Paul
weakness. Yeah.
revise that, how it's being counted, so he can have an accurate picture for monetary policy?
Why don't they revise the way they calculate CPI as well?
Yeah, all of
They
this.
do
It
revise.
suits them.
They do revise the way they
Yeah, they
calculate
take the high
CPI
stuff out.
all the time to make it smaller, actually.
Remember for years when they said, you know, prices, when they thought we had no inflation, I said, yeah, except go to the grocery store, I'm going to throw a flat screen on the grill.
Yeah.
Because I could get a great price on a flat screen. Anyway.
True. So, hey, Steve, we heard your voice. Good morning, or good afternoon,
Stevie.
How are you feeling about the U.S. jobs picture right now as we head into the NFP this month?
The jobs numbers have been holding up for the time being. Now everybody's expecting it to roll over, and I think for a good reason. But on the other hand, you can't really fight the numbers until the numbers roll, and it's not my style to try to, you know, preemptively trade a change of trend, right? So it is what it is for the time being, and I think it's lagging, right? It is generally a lagging indicator. We've seen many recessions start, actually usually recessions start when we have the maximum employment, and then it goes in reverse. So keep that in mind. Using the jobs data as a leading indicator will never work.
Okay. You know, Steve, I'm reading things about with what you just said, you know, strength of employment, and now home prices are rebounding, that he is especially exasperated that what he's done already has had so little impact. Powell, do you think that, you know, could bring in some type of surprise? I mean, if he's really exasperated, why doesn't he go a half?
No, absolutely not. Why would he go a half?
Because he's
Think
not
about
getting
it.
the impact that he was looking for isn't occurring at this
The reason
point
they're
of
not
time.
getting the impact is because
There's
monetary
still
policy.
negative rates.
First of all, but monetary policy has a lag anyhow,
Yeah.
right? Other than the expectations part, monetary policy has a lag. It's usually been calculated to be around 9 months.
Well, you know, people are, you know, it was a huge move by them, the magnitude. Yet, you know, the fact that we're not getting any impact
I
from
think that we're
still,
currently already at rates that make the possibility of a 0.5% raise practically impossible from the side of the
because we're
Fed.
still easy is the point.
Yeah, we are. There's no
we're
question
still
about
easy.
it. We're
It's
still easy,
money.
but we're still much tighter than you know, they feel comfortable with, oppositely from, you know, what they would admit. A. B, don't forget that, you know, among what they want to be doing is make sure that they get the least amount of blame. So imagine economy rolling over in 3 months from now, and they'll have to answer questions. Why were you just doing 50 basis points hikes a few months before we were in a recession? What does that mean?
Yeah.
I mean, were you completely oblivious to the fact that things were rolling over? So, I mean, in my opinion, there's no chance they're going to do a 50 because there is no upside for them to do a 50.
Volcker didn't care.
Volcker did a lot of 50s, and they also did, but not at rates being at 5+.
Yeah.
In 2023, I mean, because Volcker period was totally different in many respects.
Yeah, a lot.
All right.
First of all, the fiscal situation was a lot better under Volcker, right?
Yeah. True.
Well, great conversation about rates. But I'm going to ask you guys this, and let's talk about the market reaction here. And by the way, Dale, you don't have a guest today, right?
Correct.
Okay, so let's talk about the market reaction to this data this week. Let's say, and by the way, I shouldn't say I was surprised, but I'm not, because we've been actually trending higher in the equity markets. We stalled at the 161% extension was like a couple weeks ago, and then we started to roll over the week before last. Last week we bounced back right back to these levels. Hit a brief new high for the year on Friday. Where are we going to get the biggest reaction with the data this week? If we're seeing data come in, like let's say, you know, as the week goes on and we get past the 4th of July holiday, and we're getting a sense that, you know, the jobs data may actually indeed still be strong, and then we get a good jobs report. Is that going to give us, are equities going to rally on that, or are we going to see equity markets sell off because the markets are going to think, oh, you know, geez, here comes the Fed. They're going to come at us with another. They're going to swing for the fences and hit us with, you know, 0.5%, which they're not going to. But let's just say that the market, you know, or excuse me, the market feels that way. You know, are we going to, what type of response are we going to, should we expect here? What do you think, Ryan? Did Ryan leave? Oh no, he's here.
Yeah, hello.
Oh yeah, we hear you, Ryan. So what do you think?
Yeah, I think stocks are going to continue high here. I think this week's going to be a clear indicator of whether good news is good for stocks or bad news is bad for stocks in terms of the data.
Because really good news has clearly been good for stocks recently.
Yeah, everything we came through last week, and stocks did nothing but go higher. Again, you can't rule out a bit of end of quarter, end of half action, some rebalancing. That's always important to watch for the first day or two of the new half quarter, because you might get some flows going back in. But yeah, the data, how stocks react to the data this week is going to be hugely important.
Fly in the ointment, Blake, take a look at DAX.
Yeah. Well, I mean, we got the false breakout. We got a little false breakdown right here of the wedge, and we're right back up again, but we're not able to hit new highs. So what are your thoughts here?
And that's different than what's been going on for a while.
No, the DAX definitely has
leader.
shown leadership for so long. I mean, this whole rally. I mean, but that false breakout above the highs is definitely a little bit of a risk. Nikkei has been a leadership too. It's been right back up there, but not able to make new highs. So, what do you think? What do you think, Dale? You have an opinion here?
Yeah, I think the two best trades for the month are long VIX. If you pull up the VIX, it's a falling wedge. We all know that no one likes it down here. A buddy that I work with told me last week there was huge call buying going on, and it's a nice contrarian trade, falling wedge. And there aren't any real good products to trade. They all have decay like options, so I'm just going out buying these calls.
Oh, okay.
The
Nice.
25,
okay.
So that's what
All
I'm
right.
doing today.
Stelios, what do you think, man? Do you think that the jobs market, if we get good data, do you think those stock market's going to cheer it, or do you think we're going to see a bit of reversal?
I think that yields are going to be driving, especially given that we are at this pivotal level or very close to now in the 10-year US. So if the data is stronger, you can assume that yields are going to break out higher. But I mean, for me, the inflation data has to be higher. Jobs data, yes, we've said it before, employment has been relatively robust for months and months and months. And it was not bad. It was not employment that drove the Fed to be hiking 50s and 75s. It was inflation. So for me, for yields to keep going higher, we have to see deterioration, meaning higher rates of inflation, and that's what's going to drive yields higher. I think that's not the most likely scenario. My base case is that inflation stays, it continues to go lower, to grind lower, and stays there. And there's so many people out there calling for 5% inflation and 6% inflation again. I personally don't see it, but obviously there's a lot of factors that are driving that, and things that could happen. But I think yields are going to be the driver. So if inflation surprises to the upside, yes, we see higher yields, which means I think we see lower stocks.
All right. Well, you think if yields go up, stocks are going to go down, and that means that maybe since we're at a bit of an inflection point with central banks, and is the Fed going to?
I agree, Blake.
Yeah, I mean, it's like
I know what you're going to say.
Well, if we are at that inflection point where everybody's like, are we going to continue to raise from here? We're at maybe what the market would view as neutral, maybe higher rates and continued strength in the jobs market will actually reflect in weaker stock prices. So, matter of fact, I want to know what you guys want to think that's going to happen in the jobs market. And I want you guys to vote. Ryan, don't we have a special for everyone this month?
Yeah, we do. The NFP competition, and I'll just grab the link and stick it in the chat function there for the NFP competition. We actually have we're giving away a $50,000 traders funding program assessment as first prize for the one who comes closest to the NFP number on Friday. That's on top of the usual 2 free month on ForexAnalytix. So yeah, a super special prize to set you up for the second half of the year. A 50K traders funding assessment free.
Do you want to show how people can register, or where they can put their guests for that?
Yeah, just follow the link I put in the chat function. That takes you to the post you can see on the screen there. And if you just scroll down a bit, Blake, on that post, you'll see in the rules the Twitter link, and just click on that. It will take you to the tweet.
The Twitter link is right
up a bit. Well, down a bit under your video.
Right here.
There. Yep. So click on that there. Take you to the tweet of the post, and then you can put your guesses in there.
So you guys, let me just go ahead and make it really visible for you. So you go to that link that Ryan just gave you in the chat box. You'll see that tweet right there. It's right there. It says place your guesses and replies on the tweet right there. It has to be on that one. Don't reply to my retweet or anybody else's retweet, especially if I added a comment, which I think I probably did at some point. So reply to that, and that'll automatically register you for this competition. And we're giving away 2 premium ForexAnalytix subs. So even if you don't get the TFP account, you will still have inclusion to ForexAnalytix if you get close enough. And we've had a lot of people pop in here, and stick around in the ForexAnalytix community. So make sure you all do that. And Ryan, that's a great great contest that you put together.
Guys, the one that's closer to his assumption wins all these nice prizes. The one that's furthest away has to pay us, right, Blake?
That's right. They have to pay us by going on a date with Steve and talking about Steve the whole time. So
okay, so I'll have to really beg very beautiful women to choose some crazy numbers, please.
Right, exactly. There you go.
And no, don't tell my wife.
What's that?
And don't tell my wife.
No, don't tell your wife. Hey, Eugene wrote in. He said, "Hey, Blake and coaches, why have the riots in France and the political social unrest in Europe not caused weakness in the euro?" My 2 cents is because it's not going to influence monetary policy. But yeah, do you guys have any opinions there? Because this all happened while I was traveling. So let's start with you guys that live in Europe. How about you, Stelios? You have any thoughts there
on the riots in France? I don't know. I mean,
why hasn't it affected the euro?
Yeah, I don't know. I really don't know. Sorry, I'd love to make something up, but I don't know.
Okay,
it does make sense. It doesn't.
Yeah,
but yeah,
it's obvious that the market considers this to be,
normal.
Something, first of all, for French standards, unfortunately, it is somewhat normal, let's say. Second of all, I think it's obvious that the market thinks that it's something transitory. Right?
Yeah, there you go.
Something that's...
Plus, remember, we had this yellow vest protest in France for a couple of years now, right? Almost ongoing. So it's almost like Steve said, it's a regular thing now. I mean,
market's kind of numb to it, right?
Sad. Yeah, it's sad because
it is sad, but that's how it is, Blake. Yes.
Yeah. Okay. That sounds good. Ryan, Kman, did you have any other opinions? Kman might be gone already.
Social unrest will not be limited to France. That's my opinion.
Okay.
Everyone thinks it will.
Ryan, Kman, any opinions here?
No, same thing. I mean, it's been going on for a while. Market getting numb to all this stuff, and until we get actually the data related to. Imagine that I don't know, retail sales, PMIs, whatever for the month of June, July, all of a sudden turn around, then the market is going to trade the bad numbers, but they won't even remember that it was due to riots.
Yeah, right. I mean, it's
true.
I think it has, unfortunately,
the numbers weren't great before the riots, where they came in.
Sleeping and sliding, not sleeping and sliding. Yes, nothing disastrous.
Growth numbers in Europe.
Especially the growth engine, which normally is Germany, is acting a bit weak. But
so that's what I mean.
Yeah.
So the data is already weak before the rise. Yeah. Right.
All right. Well,
then the ECB is pressing on with hikes, so that probably compensates. So.
Oh yeah. Good point.
Somebody was just mentioning that gold's rallying or metals are rallying. Yeah, we're seeing a bit of a tick up in the metals, but it's probably a little bit of lack of liquidity here. I mean, you go to an hourly chart, not much there. So Stelios, we have something else that's happening right now, and I forgot that this is even happening. So what is going on right now?
Yes, so we are having a flash sale. If you go to pricing up on top, There you go. We're having a flash sale on the annual plan. Instead of the regular 25%, we have a 40% discount, which is pretty much the deepest discount we will give throughout the year. We have 10 subscriptions on offer at this level. If you're quick, you'll get them. Oh, we had 10, of course. Now we have less. How many do we have now?
We've only got 3 left, so it's just 3. I'll put the link in to the chat box. Yeah, we had 10, and now it's down to 3. So if you want to grab yourself a quick sub for an annual subscription to the ForexAnalytix platform, you can get that 40% off. Once they're gone, they're gone.
And remember, this is something that stays. Okay, this if you subscribe to this, you will get this every year until, of course, you let it expire. So it's a permanent price if you keep it active.
All right. Well, yeah, really I forgot we were doing that because I was traveling. So thanks for bringing that up. And yeah, I'm sorry, Dale. What'd you say?
Flash dance. And you know what, Ryan? I think you should be replacing Pat Sajak on the Wheel of Fortune instead of Ryan Seacrest. The way you went about that. So.
And we've got one more thing as well. I've actually put in the wrong link.
My
so
how many things?
Well, see, Blake was away, so I'm giving away the shop, the whole shop.
Yeah,
this is the last time you're allowed to leave, mate.
We're going to go skint after this. Yeah, so what we've also got is we've got an affiliate deal now with TradingView. So if you have TradingView charts, which, as you know, we all do here, we've now got to deal with them. If you take out an annual subscription for TradingView, as I know a lot of people do, you can now get up to 2 months free access to ForexAnalytix. So that's whether you're a subscriber or not, you can get that. There are a few terms and conditions, most of them that come from TradingView, i.e. you have to be a new TradingView subscriber, but there's nothing wrong with using a different email address.
Not a free user. If you've been a free user, as many have, that's not a problem. I mean, it doesn't break the deal for you.
Yes, it does. You have to be a new user, not had any sort of account with them previously.
Not even a free one. Okay.
Okay, so but in any case, if you have a free one, you can make a new account. Then I guess.
You can make a new account, take out an annual sub, and then let us know, and we get the notification from TradingView, and then we can set you up. So even if you are a current subscriber to ForexAnalytix and you sign up with TradingView with a different email address than you use on ForexAnalytix, you can let us know, and we'll match it all together, and we'll work all the magic. So you get, as I say, up to 2 months free, depending on what annual sub you get. But follow that link there; all will be explained. And that's it for me, giving away all the treasures of ForexAnalytix.
Right. Hey, Steve, that means you can use your OnlyFans email address.
Finally.
Yeah. All right. So
finally, I've been waiting so long to use this.
Well, guys, I want to say thanks for being here, team, and thank you all listeners for being here today. I know so many people are out and they're enjoying their long weekend. Even if you're not in the U.S., you're not celebrating, the 4th of July weekend with us here in the U.S. You still understand that it's a lot of people that are off right now. So we appreciate you being here with us, and we will not be broadcasting tomorrow, but we will be back on Wednesday. Dale, I hope you got some good interviews set up for this week.
Shy Girl Wednesday.
Oh wow. And I'm sure we're going to be Steve, we're going to have those on Spotify, and so so it'll be really great interviews. We're putting them on Spotify. If you guys haven't gone to Spotify yet and followed us there, make sure you do, because we are posting Dale's interviews, the macro interviews, the ones without a lot of charts and stuff. We're posting those on Spotify. It's a great way to listen to. I actually listened to one of them on the trip out to North Carolina. I downloaded it and listened to it there on the plane. So it was great.
Wow.
Who was it? Really cool. It was that, God, what is his name? It's a guy that I hadn't heard a lot. Joseph Barbudo. Is that his name? Joseph.
Oh, okay.
Yeah. And then I fell asleep, and then I woke up to Pedro's interview, but I listened to that one live. I kind of fell asleep because, on a plane, it happens.
It's good.
It happened.
Good to have
But
it
anyway,
out there.
Dale, pass it back to you. Thank you so
Hey,
much,
guys.
team, for being here.
All right, everyone. So we're gonna all get have a day to recharge, but a big week ahead. Someone was commenting on the metals turning. Gold was down 7, now higher. Can't make a lot out of what's going on, but I like the silver, and I think we're going to get a rally back to maybe the 25 level.
Hey, we're holding the
Yeah.
618. We didn't
Yeah.
make a lower low. I mean,
Yeah.
you know.
So, and I think, and Blake's a view of the dollar, I think there's be some nice money made on the downside. One more capitulation. So get ready. Take advantage of these offers. Become part of the community. Immerse yourself into a really an environment where everyone's breathing it and sharing it, and that happens in our chat rooms. So you like what we do here on F.A.C E, you'll be amazed what happens afterwards. And we'll see everyone Wednesday. So enjoy your holiday. Don't just count your pips, count your blessings. Adios. Thanks, team. See you
Have a
guys
great 4th.
Wednesday.
Dale, have a
Okay.
great 4th of July.
You too,
Yeah.
Blake.
Great break, guys.
Stay inside.
Yeah, see you inside, right? Maybe we'll play some checkers. All right,
All right,
see you
buddy.
guys.
See ya.